Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today we're diving into a tech-tastic lineup that's sure to keep you hooked. First, we'll tackle Apple and explore how it's balancing innovation critiques, AI delays, and a controversial ecosystem, all while keeping its future bright. Then zoom into VEON's impressive sales boost and buyback strategies, proving it's a digital heavyweight. We'll also break down the trade desk's unusual options activity and legal drama before pivoting to Fluence Energy's class action whirlwinds. So, are you ready to unravel today's tech stock stories and savvy insights? Let's hit play. Apple is buzzing in the tech world today with a flurry of insights, revelations, and critiques. Let's unpack why the tech titan has been grabbing headlines. Firstly, there's an insightful industry analysis that positions Apple in the technology, hardware, storage, and peripherals industry. Despite its dominant market presence and leading innovations, Apple displays mixed financial signals. Apple's elevated price-to-earnings, price-to-book, and price-to-sales ratios suggest the stock might be overvalued when compared to its peers. Yet the company's stellar return on equity and EBITDA suggest robust profitability and utilization of resources. There's a strong narrative around Apple's efficient operations generating high profits, but the somewhat worrying revelation is its slower revenue growth, 3.95% compared to an industry average of 21.47%. That's a pretty significant chasm which raises questions about its future performance. Now let's move on to the critique that the man behind Pebble, Eric Mijakovsky, has launched against Apple. He argues that Apple's iOS restrictions stifle innovation, making it nearly impossible to build third-party wearables that work seamlessly with iPhones. Mijakovsky has announced 2 new smartwatches, but points out the limitations his and other companies face due to Apple's restricted protocols, echoing concerns voiced by Meta's Mark Zuckerberg. This adds fuel to the ongoing debate about Apple's grip on its ecosystem, stifling innovation. Then comes Apple's seeming hesitation with artificial intelligence, a hot tech trend. The anticipation around Apple's AI rollout through features like Apple Intelligence on its devices appears to be dragging its feet. Apple's announcement that Series AI enhancements have been postponed until next year doesn't inspire confidence either, given that competitors are racing ahead. This delay could hinder stock performance, but on the flip side, Apple could benefit from taking the time to perfect its offering. While the delay may temporarily cast a shadow over Apple's ambitions in AI, it showcases Apple's commitment to high quality and thoughtful innovation. Lastly, fallback strategies discussed in industry circles underscore Apple's resilience. Even with tumultuous economic conditions and trade challenges looming, Apple's fundamentals remain steadfast. Its astounding net profit margin, generous cash flows, and a sizable net cash position render it nimble and opportunistic. Analysts encourage long-term investment in Apple stocks, viewing any dip in prices as a ripe opportunity to capitalize. In sum, Apple finds itself at the crossroads of innovation, valuation assessments, and strategic enhancement. Despite criticism and slower steps with AI, there's a persistent belief in Apple's range of high-quality products, brand power, and market leadership to drive future growth. It seems Apple never ceases to intrigue both its admirers and its critics. Strap in, tech enthusiasts, because VEON is making waves again on NASDAQ, and it's definitely worth talking about today. Let's zoom into the heart of the matter and break it all down. First up, VEON reported a rosy fourth quarter for 2024. The digital operator saw a 4.7% increase in sales year over year, hitting the $998 million mark. But don't let those numbers bore you, as there's a lot more under the hood. Even more intriguing is that in local currencies, their sales surged by 11.1%. What's fueling this turbo growth? A rocket-powered rise in direct digital services in regions like Pakistan and Ukraine, where their digital revenue popped by an eye-watering 42.4%. The cherry on top? Their monthly active digital users shot up like the hottest trending meme, boasting a 27.2% boost, reaching an impressive total of 121.6 million users. This all ties into VEON's digital transformation drive, which is galloping ahead like it's in a tech-themed steeplechase. On the profitability frontier, VEON's EBITDA climbed 14.1% in local currency. No mean feat considering they wrestled with unrest in Bangladesh and restructured Khaleesi style at HQ. Of their 152 million mobile subscribers, a growing 4G user base heralds the next phase of connectivity, with whopping penetrations facilitating the buzzword-loving folk to adopt multi-play services. And guess what? These multi-services lovers are spending more than triple on average compared to old-school voice-only customers. Talk about grabbing the tech bull by the horns. VEON isn't just resting on its profitable laurels, though. The air buzzes with excitement due to the next phase of VEON's flashy buyback program. Following up on Part 1, which laid down a cool $30 million, they're unleashing another $35 million from their wallets to buy back American depository shares. It's the sequel to last year's announced $100 million total scheme. Clearly, VEON believes its shares are playing hard to get with their real value. Buying back shares signals 2 pretty bold statements. VEON is confident in its bottom line, and they fully expect to smartly appreciate shareholder value and fortify themselves for future opportunities. You might say they're gearing up financially like a superhero preps for a sequel. These buybacks, however, aren't a free-for-all. They've got legal eagles checking rule books with criteria tighter than a pair of skinny jeans in a rainstorm. And here's a little philosophical tidbit for you. Today's announcements carry a bundle of those cautious, forward-looking statements, implying that while VEON's vision is as bright as a brand new OLED screen, the future is still one heck of a wild card. You know how it is. Market conditions can be shakier than an AI-generated fashion trend. So in sum, VEON is sprinting ahead on the digital expressway, lining up strategies tighter than a precision-cut jigsaw puzzle and giving us plenty of reasons why they're worth watching in this fast-paced world of tech. Now, what will they pull from their tech bag of tricks next? Keep those notifications on. This isn't the last you've heard from VEON. Hey tech enthusiasts, let's dive into some juicy updates from the trade desk making waves today. This powerhouse in digital advertising has caught some serious attention from big players and legal minds alike, so let's unpack it. First up, we've got some heavy hitters in the financial world making bold moves. Trade desk is experiencing unusual options activity, which is often a telltale sign that something big is on the horizon. Either investors expect a significant rise or a fall in the stock price. According to Benzinga's latest option scans, there's been an extraordinary level of activity with 30 standout options recorded. Deep-pocketed investors appear divided, but with a bullish inclination, where 56% are optimistic and 30% are holding a more bearish stance. Why does this matter, you ask? Options activity can indicate market sentiment and potential price shifts. Right now, large-scale investments are showing a trajectory for trade desk stock price, targeting between to $85. Meanwhile, industry analysts are chiming in with price targets soaring as high as $145, reflecting varied confidence in trade desk's potential. These insights are pure gold for any keen market observers looking to capture the next wave of stock movements. Now, at the heart of the trade desk lies its sophisticated ad buying platform, a go-to for advertisers seeking programmatic solutions across various digital devices. This powerhouse of innovation provides advertisers the ability to serve ads intelligently, adapting iteratively to make each ad dollar go further. That's particularly relevant as the digital ad space continues to grow and evolve. But with great power comes hefty scrutiny. Simmering in the legal pot, Trade Desk is under fire from the Gross law firm, amid allegations of materially false statements. The firm claims Trade Desk faced substantial challenges rolling out their AI forecasting tool, Kokai, redirecting clients from the older Solimar platform. According to the complaint, these challenges delayed Kokai's rollout and negatively affected revenue growth. Shareholders who acquired shares within the class period can step up and be counted as lead plaintiffs before the April 20, 2025 deadline. This lawsuit raises concerns about Trade Desk's operational transparency and corporate accountability, issues always at the forefront whenever high-stakes developments in tech arise. In summary, with hefty investments on one side and legal challenges on the other, the Trade Desk sits at a pivotal junction. With its cutting-edge self-service platform vying for dominance in the digital ad arena, monitoring these developments can spot some smart investment opportunities or cautionary tales. Whether you're a bullish believer in tech transformations or a wary watcher of corporate integrity, one thing is for sure: the Trade Desk's future movements will be a hot topic. Stay tuned for more updates as these stories evolve. Today, Fluence Energy Inc. nabbed a major spotlight on our tech news radar, and not for reasons they'll likely celebrate. Two law firms, the Gross Law Firm and Levi & Korsinski LLP, are flagging all our investor friends out there about a class action lawsuit against Fluence Energy, trading on NASDAQ as FLNC. If you've been playing the stock market game and bought into FLNC between November 29th, 2023 and February 10th, 2025, then lean in closer because this might tickle your portfolio's fancy or make it grimace. So what's going down? Allegations have emerged claiming that Fluence didn't play fair by possibly giving investors the all smoke and mirrors. Both lawsuits, though from different firms, sing the same song. Allegedly, Fluence shot for the moon with its public statements without having the kindling to actually fuel the rocket. The company's ties with heavy-hitting partners like Siemens AG and the AES Corporation seem to fray, but apparently no one sent investors the memo. Fluence's financials, those peppy outlooks and rosy margins, might have been painted prettier than a sunset, while behind the scenes, Siemens Energy even threw shade, alleging things like engineering failures and fraud. Yikes. Both law firms are beckoning investors to explore their options for recouping any losses. The court sparks may fly in May. Specifically, latest seems to be budding around May 12, 2025, for setting yourself up as a lead plaintiff. If these claims hold up, stock downturns due to overselling their growth potential could influence investor confidence and company valuations. All in all, being informed about this could be as valuable as securing early bird concert tickets. But those law firms raring to litigate don't come out of nowhere. Both the Gross Law Firm and Levi & Korsinski have resumes as frothy as pumpkin spice lattes in October. They're seasoned in chasing down errors and omissions, making them formidable allies for potentially slighted shareholders. So buckle up for developments in this legal roller coaster as all eyes tail how Fluence navigates these uneasy currents. Given the prominence of green energy solutions and battery storage tech in tackling climate change, these developments could ripple beyond Wall Street. Now, here's where you come in. What do you think about Fluence Energy's legal jam? Do these class actions rattle your perception of investing in tech stocks, especially in the burgeoning green energy sector? Maybe you've had similar experiences with stock investments. Drop your thoughts, juicy hot takes, and experiences in the comments section below. Your insights just might be the conversation starter we didn't know we needed. All right, tech aficionados, let's zero in on Apple for a moment and ponder the sell, buy, or hold dilemma. Buckle up, because here's the lowdown. Given the recent insights, Apple finds itself at an intriguing juncture. The mix of overvaluation concerns due to elevated price-to-earnings, price-to-book, and price-to-sales ratios makes one ponder whether the stock is priced too steeply for its current performance. With revenue growth trailing at 3.95% versus a 21.47% industry average, it's tempting to consider locking in profits now if you're holding on to some Apple shares, especially if you have short-term financial goals. However, Apple's exceptional return on equity and EBITDA highlight its strong profitability, positioning it as a solid long-term investment. When examining the strategic landscape, Apple's slower AI deployment and critique over ecosystem restrictions certainly raise eyebrows, but seem to align with its usual trend of meticulously perfecting its innovations before launching, potentially providing high gains in customer loyalty and ecosystem appeal later on. Resilient fundamentals such as a mighty net profit margin and sturdy cash flows act as reassuring cushions, easing worries for those considering holding. Plus, the company's track record of weathering market storms is pretty darn admirable. So here's the final scoop. If you value riding Apple's trend of steady, robust growth, sticking with your investment may pan out well over the long run. But if you're in it for a rapid rise or are unnerved by potential short-term volatility and the AI foot-dragging, you might consider reassessment. Ultimately, I'd lean towards hold for existing Apple shareholders keen on long-term rewards, unless you're jazzed by a competing opportunity that promises quicker returns. Remember, folks, always do your own thorough research, consider your financial situation, and maybe even huddle with your financial planner before deciding. Your tech-savvy decisions are yours to make. Today's tech market activity has been a whirlwind of insights and roller coaster rides, from Apple's intricate dance between innovation and criticism, to VEON's dynamic growth and stock strategies, the bullish and bearish battle waging over the trade desk, and the rocky legal waters that Fluence Energy is sailing. These narratives paint an engaging picture of the tech industry's bustling ecosystem, where innovation is met with scrutiny, growth with caution, and investment with vibrant, calculated risks. So if you enjoyed today's tech saga and want to keep riding this electrifying wave, don't forget to smash that like button, subscribe for more daily updates, and share this video with your fellow tech enthusiasts. Join us tomorrow as we dive right back into the heart of the tech world, keeping you looped in, informed, and ahead of the curve.